Certainly days like today with the S&P 500, the NASDAQ, the Dow finally coming back down to reality, making it ever more advantageous to start adding a new position to my six-figure dividend stock portfolio. I have 5 on my watch list right now that I continually keep an eye on like a hawk, and we're going to analyze these and try and figure out what one is the best. As soon I will be adding one of these to the portfolios. Let's jump right into this.
Drop it.
Oh, welcome back, my passive income investors alike, to the next big challenge, finding that 15th dividend stock to add to the six-figure portfolio, and I want your help. I'm going to take these 5 stocks we're going to go over, I'm going to put them into a poll on the community chat so you guys can actually offer me some insight and tell me what one is your favorite. Now, you might be aware I just finished finalizing my REIT position, and with the overall portfolio, I'm very satisfied with my exposure to these sectors because obviously REITs are done. We got our utilities, our sin stocks, our healthcare, and I'm definitely done with my growth stocks. So I'm trying to find a new direction to go in to add that 15th position. But I'm always very critical of this because when I pick that 15th position, I'm probably going to spend the next 3 to 6 months scaling it up and getting right into this, starting with numero uno, one that I have talked about in the past. And this is the best performing MJ stock by far. We're talking about Scott's Miracle-Gro, and this obviously deals with growing plants, dirt. They're now doing a new growth sector, which is hydroponics, and this company's been on a tear, up 128%. I check this one almost bi-daily at this point. Not sure if I'm going to buy it here, but with a $7 billion market cap, it's going to be on the lower end of the companies we're going to look at, and I'm also trying to play within a realm of stability. I'm not looking for the highest yields anymore. I just want lifetime companies that have decent yields that are going to be very, stabilize the portfolio, because right now with the sectors that I picked and the higher yield stocks, you tend to get a lot more volatility. Now with the PE of 23, this is going to be on the lower end of the PE ratio stocks we're looking at with a 1.6% dividend yield. Is this thing a buy right now? Is it on a discount? Not really, guys. And this is pretty apparent when we go into the dividend history, because let's look at the growth rate first. Going from 2015 all the way to 2020, we can see it's gone from 47 cents to 58 cents. Not the best growth rate, but the fact that they're still growing the dividend year over year is a very healthy sign. And also considering, you're getting 100% rate of return, not that the past represents the future, but where we see kind of the average. If you guys want a little trick to looking to see if a stock is at fair value for dividends, as of right now, the dividend yield, guys, is not trading at the average. Typical average is between 2.2% and 2.5%. Back in the day, you could have captured this at a 3% yield, but I don't think that's likely going forward. So unless it dips heavily here, guys, I'm just going to be a watcher, but at the right price, I could be a buyer. Moving into numero dos, a favorite amongst the dividend community. In fact, you probably hold this in your portfolio. We're talking about the Clorox company, up 98% over the last 5 years, a 30 PE. This is going to be in the higher range of PE ratios we're looking at. Mid-class kind of market cap at 26 billion and a dividend yield of 2%, which also doesn't seem that attractive considering the past yield typically hovers around that 2.5%. So it's definitely on a tear since this pandemic's rip. But Clorox, a cleaning company, and a pandemic, what do you expect other than a lot of hype coming into this play? But we can see the dividend growth rate from 2015 has gone from 74 cents to $1.11, making this way more attractive than Scott's Miracle-Gro. But because I don't understand the Clorox company very well, I don't know the growth vectors behind it, so I might have to do some more research, but this has always been on my watch list because so many of you talk about it. Leading us into numero 3. I don't know what. Numero 3, sure. Anyways, we're talking about Bill Gates. It's his favorite dividend stock. One of his largest positions is waste management. Now, I look at this just as religiously right now as I'm looking at Scott's Miracle-Gro. It is a very stable, growing dividend stock, currently with a PE of 26, actually being at fair value here with a $44 billion market cap. So we're starting to itch up in our market caps, which, by the way, if I'm looking for stability moving forward in these long-term holds, the larger the market cap, usually the more stability you're going to see in the stock performance, which we can see here. This stock almost looks like Microsoft stock, the way it's been trending upwards with a 2% 2% dividend yield, is this thing at a fair value here? Well, let's take a look. Right now, the average yield that it typically pays out seems to be between 2% and about 2.9% going back to 2016. So right now, the dividend yield, I'm going to say, is a little lower than I would like it to be, but for considering the growth it's had in the past, it's probably around fair value in my opinion, with a dividend yield going from 38 cents in 2015 to 51 cents in 2019 here. The dividend growth rate, nothing crazy explosive, but this is definitely starting to brink into my range of really stable growing companies with very healthy dividend yields. Now, on the next of my list, this is a PPCE favorite. This stock has been in the news. It has been getting hammered lately. We're talking about Starbucks because they are closing hundreds of stores over the next 2 years here in Canada, and it sounds a lot worse than it is. They're trying to kind of scale down the brick and mortar and focus more on deliveries. People keep forgetting here that they think they're just closing these stores for fun, but they're doing it because the management is brilliant. The one reason I love Starbucks so much is for the brilliant management that just seems to keep executing in ways that generate huge amounts of profit here, and this is one of the ways they're doing it. They want to scale the brick and mortar so you can just keep ordering these stuff on your phone and you can just do pickup. It's a coffee company. They realize during times like this, people ain't going into the store, so why have all this space? I think it's pretty awesome, and they're up 45% over the last 5 years, a 2.1% dividend. PE ratio, a little more than I'd like it to be, but an $89 billion market cap. How has these dividends been playing out, folks? Well, let's go back to 2015 where we went from a 20-cent dividend to 2020 where we're at 40 cents, meaning they have doubled the dividend, being the best growing dividend stock we've actually looked at so far. Now, historically, this sucks because Street Insider doesn't show the yield that it was currently trading at during these times, so I can't see the historical yield, but typically, the only thing that has kept me away from buying Starbucks is such a low starting yield, guys. These 2% I don't find them that attractive, if I'm being honest. I'd like to see it at least at 2.5% to 3% because at the end of the day, guys, I could find a better growth company like Scotts Miracle-Gro if I'm looking for lower yields. Because if I want a low yield, let's be real, I can just throw it into a high interest savings account, get 1.5% or 2%, and not be nearly as worried about the company. But I love Starbucks, and I'm not putting it into like a risky basket of companies. But at the end of the day, guys, it's on the list. I watch it religiously. I'd love to give me some exposure to the coffee kind of sector of the market. Now, nonetheless, moving into the final stock we're going to be taking a look at right now is Pepsi. Now, this company can only be comparable to Coca-Cola, but on the performance side, Coca-Cola doesn't stand a chance. This is the largest cap company we are looking at today with $182 billion, up only 30% roughly on the year here, 40% because I lost my line, and 40% probably not as attractive on the growth side of things compared to everything else we just looked at. But with a PE of 25, this one is definitely in the lower range, actually very close to fair value in my opinion, with a dividend yield of 3.1%. Let's go into this, shall we? Taking a look from 2015, from a 70-cent dividend quarterly all the way up to $1.02. My goodness, this one is definitely above the mid-range of all the stocks we looked at, with only Starbucks outperforming the dividend growth. The reason I like this one so much is the average yield has been around 3%, where it is trading right now. So for the dividend yield side of things, this thing is looking to be at a really decent value. And overall, if we take a look at the growth, because the long-term performance of this, I think, can only be compared to companies like Apple and Microsoft with the size of the market cap, this is exactly what I'm looking for on the stability growth line and a half-decent yield for a position that could be my 15th position to the dividend stock portfolio. And I absolutely love Pepsi here, and I've mentioned this in the past. The only reason I haven't added this to the portfolio yet is I was really curious if their infrastructure is comparable to Coca-Cola, because at the end of the day, you want to know who they're supplying products to, because obviously they're selling chips, drinks, beverages, all kinds of products, whether it's to let's say hotels, to convenience stores, of their product chain, like their supply chain. In those aspects, I want to know who their largest buyers are, because in situations like this, if you're selling to companies like hotels and those are like your primary focus, well, we know you're going to get hit very hard. Now, I'm going to have to do some more research here because I'd be very curious to know. And if you know this, let me know in the comments section below. What do you think has the better supply chain? Are we talking Coca-Cola or are we talking Pepsi? But on the performance side of things, Pepsi is unbelievable. I think it's a really underrated dividend stock. And of everything we looked at, this is my personal favorite. And I'm going to be keeping an eye on it here, as I have is religiously with Waste Management and Scotts Miracle-Gro, at hopes that in the next month, once I save up some money here, I might might end up having to dip my toes into the water of the Pepsi stock and start scaling it. I think I could see this being a scalable position in the portfolio. It's in a different sector of the economy, and it's a very good stabilizer in my opinion. Other than that, guys, the only other stocks, because I want to find one new one this year to add, but other than that, I am only going to be adding to my healthcare positions. I wouldn't mind scaling up my J&J a little more, but I'm going to do that by liquidating my Facebook at some point, and that's a whole conversation for another day. Not my entire Facebook position either, just a percentage of it, so I can scale up that healthcare aspect of the portfolio. But other than that, I don't see a need to really start throwing major money anywhere else. I would like to start adding more to the utilities like Southern Company, but at the end of the day, the exposure for me is still fairly large, and to try and get another good stabilizer that is in another aspect of the economy would probably give me a little more security in the long-term growth of the portfolio. But what an interesting conversation today, guys. So I'd really appreciate if you guys vote. I'm going to leave all of these stocks in the community chat. I would love to know what your favorite is and why, and tell me some growth vectors, maybe something like Clorox has, or something that I don't know about Pepsi's supply chain that you might know that I could find interesting. This is an incredible community, and you guys have got me to where I am. So stay cool, stay awesome, and I'll catch you tomorrow.